All right, so let's get out of here. Well, that one. And there she goes. Dividend Stock Talk December 8th, 2016. We are live in about 2 minutes. We're going to get ready in 2 minutes. So give me 2 minutes because I'm trying to figure out how to answer any questions you may have. Because if you ask me a question, how am I going to be able to sign into chat? There we go. So if I can ask a question. That's interesting. Okay, that's up there, that's up there. Say something. La la la. Okay, so the chat box is open. Okay, interesting. Okay, that works. Okay, so how the heck am I going to do that? Open up 2 screens at once. Alright, well, I have to figure out something else on the live chatting until I get that figured out. But until then, it's just about 9 o'clock, but not quite, so I'm wondering if you can see the other questions. Okay. Well, we'll soon find out. Let's not worry about it at the moment. All right, let me get out of here. It's 9 o'clock. Yay! All right, so we're going to get started. This is James coming to you from the 10-Minute Trader and Money Makes Life Easier. We're going to get started with our dividend capturing for the day and some of our tips that we have for you. Let's get started with who we're going to look at today. Now, today is December 8th, 2016. Okay, let's take a look at a few companies from 2016, the 8th. Right here, who do we got on the 8th? 30 companies were going EX today. So we can take 30 companies and put them through the software one at a time. You guys can do that on your own. I just want to take a look at a few, open them up, break this down. BLK, that's kind of a high dividend, 229. Let's see what BLK actually offering. That's a $300 stock. I hate $300 stocks. Okay, so if today is the 8th, okay, today's the 8th, 10 days ago from today would have been the 24th, which means you would have gotten the list on the 23rd. So let's take a look from the 23rd. 23rd. Okay, all right, yep, 23rd. So we're looking at a $2.29 move. Okay, so she opened up at 372.38 and went to 373.77. That's not that big of a move. Okay, so grab out my trusty calculator. Now we're looking at 229 on top of 372.38. 372.38. 372.38 plus 229. 229, and that's going to give us a new target of 374.67. So 374.67, see how many days it took actually to hit that. Okay, to 374, right? Okay, so we get the high of 373.77. So let's see what happens at 374. 374 there. It doesn't make it on the second day, third day takes a dip, fourth day takes a dip, fifth day takes a dip. It's going to hit it right here. The high of the day is 381. Now, I don't know if you use a trailing stop. Trailing stop may or may not have kicked in or not, but you may have done something. May have gotten there, may not have gotten there. I don't know. You may have been called out, or you may have just let it sit and run. Who knows? But take a look at this. What happened today? Now, today it actually had its dividend. It had actually went EX today. So there's a good possibility, had you stayed in, could have made that a nice big jump, because look at that. High is 392. But anyway, not the point. Disney. I love Disney. Disney's always it's always a go for me. Now, I'll tell you why Disney's always a go for me. Because Disney only pays its dividend once a year. Everybody knows who Disney is. People even all over the world know who Disney is. So let's take a few minutes to look at Disney. Okay. Disney, we can see the high way up here at 114, the low way down here in February at 86. It's a nice spread between the two, and right now she's kind of like right in the middle, 103. 103 is a nice number. Let's go look at the last 90 days. Drag it out, last 90 days, looks great. Now, 10 days from today, we were saying was the 23rd. Where is 23rd? Right here. Okay, so 10 days ago, looking at a 78-cent move on the 23rd. The opening, she opened up at 97.67. Now we're looking for 78 cents. Okay. I should get a calculator on it other than this. So 78 cents and 97.67. Okay. 97.67. And we're adding how much to it? 78 cents. Plus 78 cents. $78, not $78. There we go. So we have our new target of 98.45. Now, how long does it take to hit 98.45? Day one, it hits 98.28. Didn't quite hit it. Second day, she opens up at 98.71. So it opened up the second day, hitting your target price. So you would have gotten out on the second day at the opening of the second day because you opened up higher. Now, had you had a trailing stop, now I'm pretty sure you guys know what a trailing stop is. You have your stops, your stop losses, and then you have a trailing stop. So kind of like a stop is where you want to get out. So if the stock goes down, your stop is going to be triggered, and then you're going to get out right away. A stop limit is you want to stop it out at a certain point and no more. And then a trailing stop is if the stock keeps going up, up and down, up and down, up and down, up and down, keeps going up. The trailing stop is going to keep going up. It's going to follow the high. So as the stock goes higher, the stock goes higher, the trailing stop moves along with it. Okay? Usually you have a stop, so if the stock goes up and comes back down, you're out. A trailing stop, the stock goes up, the trailing stop follows it up. So it follows it up, then when it turns around and goes down, then you're out. So hypothetically, if you had a trailing stop, you would have gone in at the opening at 97.67 and the high right here, 99.68. before she takes a 3-day turn. Now, I don't know where you can have your stops. I don't know if you're just going to collect the 78 cents. I don't know what you guys want to do. But that's that. Let's take a look at another one. So the first two, they worked. SCG. Let's take a quick look at SCG. All right. The bottom way down here on December 14th, 56. The high up here at 76. She's down here in the 72 area. Last 90 days. So it looks like she's going sideways. It's a nice move. Looks like she's going sideways. Not bad. So looking at 57 cents. Jump over to the 23rd. The 23rd right here. Okay. Yeah, really don't even have to ask on that one. 57 cents, the 23rd. She opens up at 70 and 11. Okay? And the high of the day is 70.90. You're out the same day, even though the 23rd was a down day. You're opening. If you put your orders in the night before, you're usually going to get in at the opening. You're usually buying the stock at whatever the opening price is. And the opening price on the 23rd was $70.11. Hit the high of $70.90. So you're out your 57 cents if that's what you were looking for. Now, if you had a trailing stop, look where you're going. Way up here to 73. So, good news, I think. Now, that looks nice and that looks nice. SR. See what SR would have done. Quick chart for SR, and here we go. SR, we had the low over here back in December, the high here in was that June, end of June, last 90 days. Right about here. High here, drops down, slow increase, a little bit of a correction or profit taking, whichever way you want to look at it. But we're looking at 52 cents, the 23rd, right here. Okay, so 23rd, she opens up at 6. Here's the price right up here. Here's the opening, it's the high, the low, the close. So the opening was 64.40. And you're looking at 52 cents with 64.40 and 65.03. So you would have made it in the same day. Love it. Get in, get out in one day. Now Ray, I actually did Ray myself. Ray is next. Okay, quickly take a look at Ray and then we'll move on to something else. Now here, I don't like this. And I'm going to explain to you why. High is way up here. Low, high is, was that November? October. October is the high for 56. December last year is the low. Or actually, this could be the low right here. Wow, they did the high and the low within a week's period of time. Let's think. Zero in on that a little bit. Yeah, the low for the year is right there, 10.19. The high for the year is right here. That's crazy. All right, so let's go to 10.23, which is... No, wait a minute. We want to go 11.23. 11.23. Okay, so Ray 11.23. We're looking at a 46-cent move right here, 46 cents. The opening for the day was 54.19. Okay, so it didn't hit it on the same day. So 54.19, the high of the day was 54.42, which is only like, what is that, 30 something cent move. Can't really think very clearly at the moment. Throat's a little sore, excuse me. All right, that's day one. You got the opening here, you get the high, you get the low. Okay. You didn't get called out if you're looking just for the 46 cents. However, the next day she opens up. You would have been called out if you're just looking for the dividends equivalents. Okay? With a trailing stop, you'd probably be tagged out somewhere on here, 55 something. Nice move. We're gonna delve a little bit more. I'm probably gonna make you a video explaining what the stops are. So a trailing stop will give you a little bit more explanation of what that is. I'll do that probably sometime during the week and get the videos out to you guys. But right now, we want to take a look at what's coming up next. Okay, so let's do one more SFL, and then we'll just stop now, because every single one is actually done it in 1 or 2 days. So that's great. All right, here we go. Nice looking chart. Just like a sideways chart. Hit the high way up here back in December of last year. The low of the year is here in February. She's been going sideways ever since the last 90 days. Okay, and nice. This doesn't look good from here. Going sideways, and look at all this red, all these down days. Something's happening there. Okay, she hits down here at the beginning of November, and she shoots up. It just goes up steadily. Let's jump over to the 23rd, which is right there. Okay, so the 23rd, look at this. 1, 2, 3, 4, then a doji, and then 5. I don't know if you can you consider a doji as an up day or a down day, or is that just a neutral day? Closes the same price as it opens at? I don't know. Okay, so SFL, we're looking for just 45 cents. So she opens up at 14.50, and the high is 14.65. That's only 15 cents. Now, I like to tell people 4 or 5 days down, I'm out. So that's what the question for the doji is. Is that considered a down day or an up day? I really don't know. It could be, really irrelevant, because it looks like it, down for 3 days, and she opens higher than the previous close. So it wasn't really a down, because here she opens up a little bit higher than she closed the previous day. And then the doji, she opens up higher again. But it wasn't really an up day or down day. And then 4 days in a row, or 3 days in a row. Yeah, wait a minute. Yeah, so it's 1, 2, 3, 4 days in a row. They're down days, yet the market maker is opening higher than the previous day's close. Okay, so what did we say? We're looking for 45 cents right here, 45 cents. All right, she opened up at 14.50, and 45, that's 14.95. Okay, so we're looking at 14.95. So you got 1 days, 2, 3, 4, 5, 6, 7, 8. 8 days before you're out. Ooh, I don't like that at all. Okay, but anyway, 8 days you're still out. 9 days you're really out. Because you're out high as 15. Okay, whatever. It did make it, before the EX date. You would have collected your 45 cents, hold a couple more days, you would have collected 45 cents, and then look, she drops down. So it's a good indication, hey, take their money and run. So look at every single one so far has done what it's supposed to have done. Okay, with that being said, I want to jump over and look at what do we have coming up. Thursday I'd like to dedicate to options, because Tuesday is more for the people who are safe, secure, looking for that 1 or 2% per month, or the 1 or 2% per week. But Thursdays, I like to get the more aggressive crowd in and doing options, because you get more leverage, you get more options, for lack of better words, on how much you can make. So, considering today is December 8th, whatever we're looking at today, we're going to put a couple of trades in tonight. Okay, so first thing in the morning, they should be filled. So that'd be the 9th. So 10 days from tomorrow is the 23rd, right? So this is who we got on the 23rd. Interesting. Okay, so the week of the 23rd. Which one did I want to look at? I wanted to look at this one, because this one right here, Comcast Corporation. This is a weekly option. I found this one this afternoon. I was just showing a client a couple of nifty little tricks, and this is something I couldn't believe this one. So Comcast is coming up. Let's quickly look at Comcast details before I show you the trade. So it's CMCSA. Okay, so Comcast got a high over here in November, December. Okay, so the end of November, beginning of December, that's the high. This is the trade I already put on. I'm going to show you that one in a minute. Here's the low way down here, January 19th. So the low of the year is down here. The high is way up here, the last 90 days. This is Comcast. Everybody knows who Comcast is. Okay, she takes a nice slow little dip down here to the beginning of November. Then from November, she shoots up and stays right along. Nice, fine and dandy. The chart looks great. Let's take a look at the seasonality. How does it normally end up the end of the year? You click on the style button right here, slide down, this little pop-up comes up, and we want to switch it from standard chart down here to the seasonality. Now, why are we looking at this? Well, because we want to look at how does this thing normally perform? You know, like what is it going to do in the last 3 weeks, the last 4 weeks of December? If we look down here, this red line, this shows us what it does average. From January, this thing's in a slow increase all year long. No big moves, nothing erratic, nothing crazy, just a nice steady move upwards. Look at that. So the last 3 weeks, we can look at a nice little steady move to the upside. So that's great. That's another great thing. Okay, so let's grab software here and put CMSCA. Okay, CMSCA. And hit go. All right, I think I got the wrong top sticker. Ticker symbol. CMCSA. All right. Silly me. It was long enough. CMCSA. CSA. It happens. Come on, nobody's perfect. And this makes me uncomfortable. Let me tell you why. Comcast is a big company. Everybody knows who they are. No dividends in 07, no dividends in 08, none in 12, none in 13, none in 14. They're giving out 27 cents. The yield is only 1.6. But we're looking at 10 million shares a day on average. 10 million shares a day on average traded. So that's a good number. I like that. But I don't really like this very much. So let's see what this chart looks like. CMSCA. Now they're not paying the dividend until around the 29th or the 30th. So let's plot the dividend and see what that looks like. Come on. Alright, for some strange reason this is not working at the moment. CMSCA, that's the right symbol, right? See, even I mess up once in a while. I've been doing this for like 20 some odd years. You got to get it all right. CMCSA. CM. I wonder why I got this symbol wrong. CSA. Silly. Alright, that's what we're looking at. I like the average because it's way down here, 10 days prior, and it moves up. What does it continue to do for the rest of the year? Move up. I like that. Okay, so what does Yahoo Finance have to say about it? When we look at 10 years worth of data from Yahoo Finance. Now, this kind of makes it like a no-brainer. I love this. I'm going to show you the trade in a minute. You're going to really love the trade. All right. 10 years ago, Comcast was at 29 bucks. Okay, that was in 07. 08, everything tanked. It went from 29 bucks down to 13. So it loses about half its value. Then it shot up from 13 all the way up to 69. So that's great. I love where it is now. You know, look at all the dividends they're paying. Nice set of dividends. Look at all the D's. Gotta love it. Okay, so that's good. All right, one chart is good. One chart's not. One software is good. One software is not as great as I'd like it to be. Now, over in the members area, the 10minutetrader.com is where you can find the software. And this software too. Okay, so let's go and take a look at the actual trade that I found. I don't get too excited about it. This is just going to be a sample. I'm not going to tell you to do this. I'm just saying it looks good. Okay, so let's bring it back up to the standard chart so you can get a better idea of what we're looking at. Okay, so the close of today was 69.23. That's the close of the day. Now, SCA. CSA. Comcast. There we go. Now, Comcast has weekly options. Okay, most people don't like weekly options. A lot of people don't know how to trade them. A lot of people don't know anything about options whatsoever. Now, I'm going to do what's called a spread because I want a higher return and lower risk. Okay? Spread is basically where you're buying one and selling another, very close together. The maximum you can make is the difference between what you bought and what you sold. Okay, so for instance, right now the stock ended at 69.23. So right here where this line is, okay, that's right where they call that at the money. Cause that's right where it is, because it's between 69 and 69.50. Now we saw the software, my software says Comcast is going to go up. Okay, even the seasonality, my seasonality software and Thinkorswim seasonality software both say it's going to go up in the next couple of weeks. So I'm thinking at 69.50, I wouldn't mind owning it at 69.50 because I think it's going to go up a little bit higher. Okay, I'm not telling you what to do. Now, this option is going to expire tomorrow. So I'm going to get in at the opening of the day tomorrow and I'm going to hold it through. And you know what? I'm not going to mind if I'm going to be assigned because let's put the trade on. I'm going to show you. Now, if I was going to, I want to sell a put spread called a credit spread. So what's going to happen is I am selling the 69.50 and I am buying the 69. So what does that mean? That means if the stock goes down below 69.50, I have to buy it at 69.50. If it goes below 69, it'll say it hits 65. It means I have to buy it for 69.50. But then someone has to buy it from me from 69. So the difference I'm going to make is the difference between the stock price now and what I have to pay for it. So the most money I can make off of this trade is 27 cents. It's not a heck of a lot. No, it's not. But the good part is I can get as many contracts as I want to. However, keep in mind that if the trade goes against you and you have to buy this at 69.50, each contract is worth 100 shares. So if I sell 10 contracts, that's 1,000 shares. And do I really want to own 1,000 shares of Comcast? Sure, why not? Okay, so 10 contracts. Let's hit this and I'm going to explain to you what it is. The maximum profit I can make is 270. The most I can lose is 230. Okay? The cost of the trade, including the commissions, is $30. So I'm getting 270, but the most I'm going to make out of that is 240 because the cost and the commissions. And how much is it going to cost me to put this trade on? $230. Do you see where I'm going with this? So they're going to take $230 out of my account, and I'm actually going to make $240. That's pretty good. I mean, that's over 100% for one day. It's pretty darn good if you ask me. Okay, so worst case scenario, I buy the stock. It's $69.50. You take the $69.50 and you subtract the 27, which I collected. Let's get this out of here. Whoops, where was it? Okay, collected the 27 cents, and my break even is $69.23, which is exactly where it is right now. And I wouldn't mind buying Comcast at $69.23. Okay, I'm putting up $230. Okay, I'm making $240 off that $230. That's over 100% return. That's like 105% return for one day. And I want to buy the stock anyway. Okay, so if the stock closes tomorrow afternoon at $69.50 or higher, I make 100 and something% on my money. If it doesn't, I buy the stock at $69.50, but my actual cost is $69.23. Okay, so Monday morning, worst case scenario, I'm going to own 1,000 shares of Comcast. So let's get out of here because I already did 10. All right, I already got that trade in for earlier. Let's get out of there. Come Monday, this is not going to be an accurate price. It's going to give you a rough idea. Back to a single option. Now Monday, remember, if I got stuck buying at $69.50, right? I made 27 cents, so I can turn around and sell it for 68 cents. So if I got stuck buying it at $69.50, I can turn around and make 68 cents in order to sell it for the next 5 days. Do you see what that is? I don't know. It's a lot of interesting math. So I collected the 27 from the selling the put over here. Okay. And now, if I have to buy it, I'm going to make the another 68 cents. So you add the 68 cents on top of the 27, and where are you? You're getting a $69.50 stock for, I don't know, 68 change. But I want to buy it anyway because historically speaking, this thing moves up going into the dividend. And by the way, how much is the dividend on CA? All this for a measly 27 cents. And that is, like I say, over 100% on the spread option, and then another nice, what is that percentage on that? 68. Okay. Not a whole heck of a lot, because I have to put up 13,000 in order to make 665. Yeah. See, I like doing the options, the spread options, because you get your return is higher. 665 and 13,000. 665 divide 13,000. That's going to give me a return of 5%. Okay, so do the math. Making 100% tomorrow for one day, and then I turn around and I sell the option for someone to buy it for me for, okay, let's get out of here. Okay, it's at $69.23 now. Okay, I sell the option, the spread option, right here, the vertical. All right, the 69 and a half for 27 cents. So I'm making over 100% on that. Okay, so the first trade I'm making over 100%. Granted, it's not a lot of money. How much was it? It was like $270. Okay, quickly. All right, 240 bucks. 240 bucks there. Oops. 240 bucks there, and clear. 240 for the first trade. Plus, was it 665 for the second? 665 for the second. Plus 665 for the second trade. So we're coming up with 900 bucks within what? From one Friday to the next Friday? Well, that's not bad. And how much money do I have to put up? Well, the first one's kind of silly because I have to put up 13,861. Divide 13,861. So it's like a 6% average. Because even though you're making 100% on the first trade, back to the first trade. Okay, so even though you're making 100% on the first trade, it's only 230 bucks. Now, if you took your 13,000 and did that, okay, because you can get a lot of contracts for $13,000, you know. But unfortunately, if the stock goes against you in the wrong direction, you'd probably, I don't know if you have enough money in your account to cover, you know, $13,000 worth of options, because $230 worth of options, that's 1,000 shares that I have to purchase, which is 13,000 bucks. So, you know, you have to think of it that way too. Okay, so that's Comcast. That's a nice trade. So let's take a look at what else we have out there, just for the fun of it. These are all whoops, just the weeklies. Who else we got? All right, GPS. Okay, we can take a look at GPS, or okay, we'll put in GPS and we'll put all in these guys. Okay, let's hit reset. We're going to put in all 9 companies. GPS. Who else do we got? DEWDC. DEWDC. Now, I don't have a photographic memory, so I got to switch back and forth the screens. So, sorry, I'm going to apologize now for that. All right, NUE, KSU, NUE, KSU, what was that, 3 more? VER, CCJ, all right, VER, I forget it. CCJ AY. Oi, CCJ AY. Alright, CCJ AY. I'm gonna hit go and see what shakes loose and see if we can find another weekly option for that, for, you know, coming up tomorrow. Alright, DE looks good. Alright, pops up. This is what we're looking at. Now this one has some missing data here, missing data there, and it's more than 10 days, so we're gonna say no thank you. This looks great. I love ones. That looks good. This missing a whole bunch of data, 4 days. I'm not liking that one. This is not bad. I like that. This only 4 years. Nope. This 4 years, and this one didn't even make it, so I'm going to say nope. This one only missing 1. I can live with just missing 1. Now this here, let's take a look at this one. Granted, it's showing some decent numbers. Look at the dividend. 1/2 cent. We're going to say no. 18 million. Who's offering 1/2 cent? 18 million should AUYF. No thanks. Ain't worth my effort. All right, we're looking at these three. Now, do we want to chase 7 cents for a 10-cent stock? I don't know. That's a tough one. All right, let's look at the numbers. All right, closed at 10.25. The high was 13. The low was 7.40. You got a 1-year target of 10.71. It's not a big move up, but we'll take a look at that one. All right, here this makes me a little leery. Okay, it closed at 66.75. The high for the year was 68. The low was 33.90. They have a 1-year target of $58. 58. That's an $8 downward. That's going the wrong direction. Do I even want to do that one? And here's another one. Look, it's 102. The high was 104. Low was 70, and have a 1-year target of $99. Why do I want to go backwards? Let's take a look at the charts and see what's actually going on. Okay, so let's take a look and see what Yahoo has to say about these. All right, first one we're looking at John Deere. Everyone knows who John Deere is. Okay, 10 years ago, John Deere was somewhere around $50. Okay, dropped in 08 like everyone else does. Comes up going sideways. She's at 103. Okay, I can deal with 103. Hasn't seen 103 before. Now, interesting thing about 103 being the high for the last 10 years. Do I want to be sitting on the top of a ladder reaching for the stars? No, thanks. I'm going to say no to John Deere. I am. I feel bad about that. John Deere's a good company. Okay, 103. Or actually, the high was 104, 83, 105. Wait a second. If she closes at 102 and the high for the year was 104, why didn't Yahoo show that? Because if that's correct, 104 and we're at 103, that's interesting. Let's jump on over. Okay, well, let's hold off on John Deere for a second. Let's take a look at these guys and find out why they're looking on sad size. Nucor Corporation. Never heard of them. Don't like that. Never heard of them. Okay, so Nucor, 10 years ago, was 64. Okay, peaked out somewhere around here, around 75. Drops down in 08 like everything else did, went sideways for 8 years, and then the last year she goes back up to 66. Basically back where you started from. Do I want to invest and have it be worth the exact same 10 years later? I don't think so. So we're going to say no to Nucor. Okay, we're going to say no to Nucor. And last one, we're going to take a look at this guy right here and see what this one says. Camco Corporation. Never heard of them. Sorry, guys. And this is a big fat no. Okay? Now, 10 years ago it was at 38. Now you lose 60% of your valuations at $10. No, thank you. Okay, so the only one we're looking at for next week is going to be John Deere. Okay, so let's take a look here. Plug John Deere into here and see what this says. This is my seasonality chart. I like mine. Okay, let's get rid of the average. Let's get rid of 2015 and just stick with the average. Okay, so 10 days prior to, we're going to be way down here, and we can hit our dividend right there. We can hit that target, no problem whatsoever. If we don't hit it there, look, from here, capture the dividend and just ride it up to the end of the year. Gotta love it. This is like a no-brainer. You hit ones all across the board. The only thing I don't like about it is they have a target price a little bit lower than I prefer. Okay, so my two pieces of software look good. Let's see what Thinkorswim has to say. For DE, John Deere. I hate gap ups. I do. Do you know why? Because with gap up, you're gonna have it's gonna come down. Okay, so she has the high of the year right where it is now at 104. The low is way down here in January. Who buys lawn tractors in January? Anyway, last 90 days. This is what we're looking at. Now, John Deere only has a 60-cent dividend. That should be easy. Okay? Now, come over to the style button. Click on that. Drop down menu shoots down. Chart mode, we hit standard, we're going to hit seasonality. Now this I can deal with. Here we are right here, the blue. And the red line is what we're going to be looking at for the next couple of weeks. It's going to show a little dip in the next week or so, then she's going to come up and can hit strong by the end of the year. That's all I want. I just want 60 cents. However, it's a weekly option, so let's see what it's going to do for tomorrow. Okay? Let's look at John Deere. Let's go back to reset the chart back to the standard so we can get a better look at what we're looking at. All right. That gives me some better idea. Okay, so let's see what the options look like for John Deere. Oops, just plain DE. Okay, Deere and Company. Now, she's at 103.90. So if I do the 103, 104, we're looking at 8 cents. Do I think it's going to hit 8 cents? Do I want it to hit 8 cents? Do I want to buy it at 104? I'm going to say, yeah, why not? Let's buy it at 104. Okay, I sell this. I'm getting 36 cents. Okay, 36 cents from 104 is, I'm going to show you in a minute. Okay, my break even would be 103.64. Okay, so she closed at 103.92. And I sell this spread, 103, 104 spread. I'm picking up 330 bucks. It's costing me 640. So it's almost 50%. So I get a 50% return for one day on a stock that I want to buy. I can deal with that. All right. Now it's a $100 stock, so you have to really calculate how many shares you can buy. If you can buy 1,000 shares, fine, sell 10 contracts. If you can buy 500 shares, then only sell 5 contracts. Whatever amount of shares you're going to buy, divide it by 100, and that's how many contracts you can sell. Okay, you got to make sure you can understand that, because 640 is a lot of, it's not a lot of money. However, it represents a lot of contracts. All right, so the most money I can make off of this trade is 330 bucks, which is about 50% of what I'm putting up. And that's just for one day. Worst case scenario, I get stuck with the stock. I buy 1,000 shares. 1,000 shares is going to cost me 12,000 bucks. It's not bad if you think about it. Now, if I buy 12,000 shares at 104, what can I look at next week? Next week, what are the 104 is going for? Oh, love that. 133. That's 1,300 bucks for selling it for the exact same price I paid for it. Is that nuts? That is freaking nuts. Okay, so 1,300 is what I would make for selling it for the exact price that I paid for it. Okay, do you see this? So if I sell this option tomorrow, the 103, 104, I get stuck with it, buying it at 104. First thing Monday, I turn around and I sell the option for someone to buy it for me in 5 days. Now, it's probably not going to be the 133 because you get the time value decay. However, everything settles on Saturday. So if I sell the 103, 104 tomorrow, I get stuck with it, and Saturday I have, it gets taken from my account and I have 1,000 shares. So first thing Monday, I can sell the 104s, which is exactly what I paid for it. And whatever I paid for it, I can sell it for. Okay, so right now, I'm going to give you the return as if it would be right now. Now Monday it's going to be different because the numbers change all the time. Now 13,000, and we have to put up 14,000. 1,300. We have to put up 1,438. Is that right? Okay. declare 1,300, 1,345, right? And we're dividing 14,800. 14,380. 14,380. And that's going to equal, oh wow, 9%. All right, so we're getting 50% on Friday, tomorrow. Granted, it's a small 50%. Okay. And then by next Friday, that's another 9%. That, my friend, is a nice spread. That's if, let's get back to where we were. Okay, this is where John Deere is now. And John Deere, all right, let's get out of here. Right here, look back at the seasonality again. Okay, this is where she is now. Okay, it basically, and the red represents the average. Okay, the average over the last few years, this is what the stock does on average. She's right where she is right now, right there. She's at a peak. She's going to dip a little bit, and then she's going to go up. Okay, so I'm going to get it at 104. All right, 104. Dips a little bit. She might drop down to what, 103, 102, somewhere in that area, and then she's going to shoot up again. That's what it's done historically. Doesn't mean that's how it's going to do this time, but the numbers look good, and I like good-looking numbers. Okay, so I got 50% for the spread option tomorrow, and then if I get stuck with the stock on Monday, I'm going to sell the option for the exact same price I had, paid for it, to get rid of it on Friday. Doesn't happen, I'll just carry it out for the next Friday. The interesting thing about weeklies is you keep on doing it. So if I own it at 104, look at this, 177. It's not going to be the exact same because you get the price value, and as time goes by, these numbers drop. So, if you want to go over it again, we'll go over it again. All right, so if you guys have any questions, I didn't have a chance to pick up any questions only because this is still practicing. So I'm not 100% sure how much more interaction I can have because I can't quite figure out how to use it. I'm good with the trading, okay, but getting to that point's a little tricky. But I'm going to get there. I hope you guys take advantage of that, but make up your own minds. Look at what it is you want to do, and if you're not a member and you don't have access to the software, then sign up and become a member. It's only $30 a month. Sign up, become a member. Have any questions, just ask. I'm here to help you out. So it's 10 minutes of. We usually go through our wrap up and you're usually going to answer some questions. I don't have any questions at the moment because this is still practice run and seeing how we're going to do. So I'm just going to let you guys contemplate everything I said. This video is going to be up and running in a very few minutes, so you can re-watch it if you didn't understand anything. If you have any questions, just send me an email, send me a text, one of those. As time goes on, we'll get a little bit closer and closer on better interaction. But at the moment, that should give you something to go off of. Anyway, this is James signing out for the 10-Minute Trader and Money Makes Life Easier. We're going to click over here and catch you guys on Tuesday. On Sunday, I'm going to do another report, send it out so you get first thing Monday morning. And then we're going to do a wrap-up on Tuesday and see what happens then. Okay, you guys have a great day. I'll talk to you Tuesday.